Hello, listeners. Welcome to the Pre-Market Update. The podcast is powered by AI. I'm Joe.
And I'm Sarah. Today is February 12th, 2026. Let's dive in.
Looking at the Indian markets this morning, the sentiment appears to be a bit of a mixed bag. The GIFT Nifty is currently trading around the 25,980 mark, which is roughly a 14 to 25 point discount compared to the Nifty Futures' previous close. This suggests we're looking at a relatively flat to muted start for the Nifty 50 and the Sensex today. Now, if we look back at the last session, the markets were somewhat lackluster, ending almost unchanged. However, there's a massive underlying story involving two giants. For the first time in 15 years, State Bank of India, SBI, has overtaken TCS in terms of market capitalization. This is a huge signal to the market that investors are rotating out of IT and into domestically focused, heavyweight financial names. In terms of F&O, Qs, or futures and options for those new to the game, we're seeing some consolidation. Most analysts expect this sideways movement to continue in the short term, though the overall tone remains positive. We're keeping a close eye on the 26,000 level for the Nifty, breaking that could trigger some fresh momentum. For today, expect the heavyweights like Reliance and the HDFC Twins to dictate the direction if the global cues don't provide a clear spark.
Moving over to the international stage, things are far more electric, especially in Asia. Japan's Nikkei 225 is the star of the show right now, breaching the 58,000 mark for the first time in history. This Takaichi trade, named after Prime Minister Sanai Takaichi, is fueled by a wave of optimism following her election win, which has significantly eased investor fears about aggressive fiscal tightening. In the U.S., however, the mood was a bit more somber. Wall Street ended lower overnight after a surprisingly strong payrolls report. Now, usually, more jobs are good news, but for investors, it's a double-edged sword. Strong employment data means the Federal Reserve is less likely to cut interest rates anytime soon. Both the S&P 500 and the Nasdaq felt that pressure as yields climbed. Over in Europe, the FTSE in London, the DAX in Germany, and the CAC 40 in France have been trading with a watchful eye on these U.S. developments. Meanwhile, in the commodities space, oil has climbed for a second day. We're seeing Brent crude react to lingering tensions between the U.S. and Iran, which is offsetting reports of swelling supplies. And a quick note on currencies, hedge funds are surprisingly flipping to a bullish stance on the Japanese yen, betting on its strength despite the robust U.S. data. It's a complex web for traders this morning.
Back home in India, the corporate newsroom is buzzing with 4 to 6 major stories that could move the needle today. First, as I mentioned, is the SBI versus TCS flip. This rotation into value and domestic banking is the primary theme right now. Second, we have to talk about the renewable energy sector. Companies like Adani Green and Tata Power have essentially received a lifeline. Following a surprise trade deal with the U.S. under President Trump, tariffs on Indian renewable goods have been halved. This reopens a massive export market and alleviates fears of a domestic oversupply. Third, the Q3 earnings season is throwing up some interesting numbers. Bharti Airtel, HUL, and HAL are all in focus today as investors digest their latest reports. We're seeing a bit of a divergence. While Lenskart has seen a profit surge, LG India has reported a decline in profits, which might weigh on sentiment for consumer durables. Finally, keep an eye on BHEL and Ather Energy. BHEL is seeing renewed interest due to government infrastructure notifications, and Ather is making waves in the EV space as it prepares for its next phase of growth. The common thread here is that domestic India is currently the preferred play over export-led IT.
Scanning the global corporate landscape, the news is dominated by earnings and some major stock swings. McDonald's is a standout. Their U.S. sales have grown at the fastest pace in over 2 years. Their value strategy is clearly resonating with cost-conscious diners, and they managed to bounce back quickly after that E. coli scare last year. On the tech side, Cisco is having a rougher time. Their shares slid about 7% after hours. Even though their revenue grew by nearly 10% and beat estimates, their future forecast was described as mediocre. It goes to show that in this high interest rate environment, the market is punishing anything less than stellar guidance. In Asia, Shiseido, the Japanese cosmetics giant, is celebrating its biggest rally in 8 years. They beat analyst estimates for the fourth quarter, proving that the premium beauty segment is still resilient. Contrast that with AMP Ltd in Sydney, which saw its shares plunge the most since 2003 after missing full-year profit expectations. We're also seeing a lot of activity in the China-Hong Kong stock link. Investors are rushing into this strategy, which has already returned 27% this year, as they bet on which stocks will be added to the mainland trading link next. There is clearly a lot of smart money moving into Asian equities because valuations are seen as much cheaper compared to the US.
Turning to the big picture, economics and geopolitics. The primary driver for the next few weeks will be the fallout from the U.S. labor data. Betsy Stevenson, a prominent economist, recently noted that while the jobs report was strong, the U.S. labor market hasn't necessarily turned a corner yet. This uncertainty is what's keeping the Federal Reserve, and by extension, the RBI, on high alert. If the Fed holds rates higher for longer, the RBI has less room to cut rates here in India without risking capital flight. However, the surprise U.S.-India trade deal is a massive geopolitical win. By having tariffs on Indian goods, it signals a strengthening of the plus-one strategy, where the U.S. looks to India as a primary alternative to China. Also, keep an eye on the U.S. House of Representatives. They recently voted to end tariffs on Canada, which suggests there is growing anxiety within the U.S. government about the impact of aggressive trade wars. For India, these shifts in trade policy are arguably more important than short-term interest rate fluctuations right now.
To wrap things up for our listeners, here are the key takeaways for today's session. First, don't be spooked by a flat start on the Nifty. The real story is the internal rotation. Money is moving from IT into banking and renewables. Second, Japan is hitting historic highs, and that optimism is spilling over into other Asian markets, making them more attractive than U.S. tech at current valuations. Third, watch the U.S. inflation data coming up later this week. That will be the next big catalyst for the Federal. And finally, for Indian investors, the U.S. trade deal is a fundamental game-changer for the renewables sector. If you're looking for momentum, that's where the fresh wind is blowing. Stay cautious on companies with heavy U.S. tech exposure until the interest rate picture clears up.
That wraps up today's update. I hope you gained useful insights to navigate the markets today.
Add your thoughts in the comments and follow us for more such updates. This is Sarah.
And Joe, signing off. Have a profitable trading day.